So I think we can start. 10, 15 years ago, I heard about securities litigations for the first time, or shareholders litigations, and I thought it was really a strange phenomenon where you sued your own companies for money that you sort of already owned, and I'm not sure I'm much smarter today yet, but therefore I'm really happy that we can have this seminar today on shareholders litigations, and for sure I don't know so much as you pointed out, Staffan, and about this either. That's why it's so great to organize these kind of seminars. But anyway, some of you know a lot about this, and you can have some more initiated questions. To my excellent panel, I would like to welcome Darren from. There's so many letters in your company name.
You can just say KTMC.
Yeah, okay. Yeah. Kessler, Topaz, Meltzer, and Czech, and that's you, Darren Czech. And by your side, you have also Sundqvist, representing Saxena White. Both of those companies are associate members of the association, and we're really happy for that. And Staffan, we're really happy for all your contributions. You are representing today Handelsbanken Fonder.
A true member.
A true member, yes, that's right, a true member. And Staffan is also here to be sort of my sidekick, to also help out, to comment and ask all these experts now, all the intricate questions. So with that, I would like to kick off. And please ask questions. We are recording, so if it's a stupid question, it will be out on the. That's good for self-regulation on the web later on. No, but we have Darren. You sent me over some slides.
Yes.
So we can start off with that.
No, I'm fine here. Yeah. So, just for people that don't know, and I think most of you have some understanding of shareholder litigation, when we say shareholder litigation, it really encompasses a lot. So the landscape of what affects investments has really changed a lot in the last 10 years. So we have, traditional class actions in the US that you probably read about in the news against Enron and WorldCom and Bank of America, the big cases. And then in the US, we also have what we call corporate governance or M&A litigation. So that's mostly in state court in Delaware. You've probably read about some litigation AP7, for example, has been involved in, where the goal of the litigation is not to necessarily recover money, but to change the behavior of the company or to affect the price or process of a merger or acquisition. And then we have opt-out litigation, where an investor can step out of a class action and bring their own claims. So those are kind of the three general types of shareholder litigation in the US. And then there's now a growing number of jurisdictions globally where you have opportunities to participate in shareholder litigation. Most notably in the UK, in Germany, Japan, Australia, some in Canada, and then cases popping up in Italy, Portugal, Spain, Taiwan, China. So there's a lot of different opportunities. Now, most of those cases are not class actions outside the US. They're what we call collective or group actions. Except for Australia and the Netherlands, there aren't really any true class action type systems. So cases that you read about against Danske Bank in Denmark, for example, or Volkswagen in Germany, those are not class actions. People call them class actions because there are lots of different investors who are suing the company, but they're really collective actions. So there are a lot of different individual cases against a company. I could spend 3 hours talking to you about how this litigation works outside the US. What I will say is it's very complicated, and it's something that you need to pay a lot of attention to because you can expose yourself to a lot of financial risk with that kind of litigation. So the slides, just really quickly, are just to give you an idea of kind of what's out there. So this is showing the number of federal securities class actions brought in the US for the last, I don't know how many years it's going back a long time. But you can see that for the most part, it's been very consistent, that there have been somewhere between 200 and 400 federal securities class actions brought in the United States every year. That's a lot of litigation. It's way too much litigation, in my opinion. A lot of these cases are frivolous and should never be brought. They're brought by law firms that are looking to make money off of a quick settlement. But there are a handful, probably 20 or 30 cases a year that are real fraud, that really require a strong institutional investor to be a lead plaintiff. And you can see that red line there is the number of listed companies in the US. So even the number of listed companies has remained pretty consistent, and so have the number of cases. The uptick in 17, 18, and 19 were a result of I won't go into detail, but it's a result of a number of companion cases that were brought against companies that had similar litigation brought in state court against them. It's kind of an aberration. It won't happen again, probably, at least for a long time. But again, the numbers are pretty consistent. So we can go to the next slide, please, Frederick. So this just shows you the number of settlement dollars that are out there every year, and why I think it's important that every investor have somebody, either internally or an external company, collecting money for you if you're investing in US equities. So there's between $1 and $7 billion on an annual basis in class action settlements. It's not that hard to fill out the paperwork and get this money back, but if you're a diversified investor, it can wind up being somewhat overwhelming, and so it's good to have a service or your custodian. Somebody should be looking after this, and you should know who it is, because I will tell you that for some investors, even here in Sweden, who weren't doing this, that we started doing it for them, they're getting millions of dollars a year back in settlement dollars. So it's real money that's coming back. It's not what you see on television that you're going to get a check for $3. You may get some checks for $3, but generally it's a significant amount of money. So this next slide just goes to what I was saying earlier about the kind of globalization of shareholder litigation. So currently my firm is tracking over 100 cases in 24 jurisdictions around the world that affect our clients. Now, a lot of these cases will have very little effect, meaning that the client has very little investment in a company in Estonia or Cyprus. But some of these jurisdictions are places where there is very significant investments, South Korea, Australia, Germany. So there's a lot of litigation. The number of cases has been increasing, and the number of jurisdictions has been increasing. Go to the next slide, Frederick. So these are the largest recoveries outside the U.S. for shareholders. And the reason I think this is important as a kind of level setter is that there's historically been a feeling amongst investors that participating in litigation outside the U.S. is not worthwhile because they don't really recover any money, which before 2010 was probably true, because most major litigation wound up in U.S. courts. But you cannot sue a company that doesn't issue on a U.S. exchange in a U.S. court any longer. So these cases now are really meaningful in their recoveries. You can see we've now had 3 cases that have recovered over €1 billion. So, you know, there's real money to be recovered in these cases. So while I do stress what I said earlier, that you really have to pay attention to what you're getting yourself involved in these cases, in the right circumstance, you should be involved because there's real money to be recovered. And this is just a list of, in the last 5 years, Nordic investors who have been lead plaintiff in U.S. securities class action. I think most of our clients are surprised when they see how many of their colleagues have been involved in shareholder litigation in the U.S. I was saying to Dan and Staffan before we came up here that there's not a big case in the U.S. these days, meaning a very large damage case, high-profile case, where there's not at least one, and most of the time multiple European institutions that are seeking to be a lead plaintiff in the case. And more often than not, there's a Scandinavian investor involved in that. We could talk for hours about why that is and what I think the reasoning behind that is, but it is one of the most meaningful tools in holding companies accountable in the US these days. There are not many ways, as you know, between the SEC and a lot of other things under Donald Trump that have not allowed investors to do what they would be able to do in other jurisdictions, and this is one of the most powerful tools that they have. So I thought that was just a good way to kind of set the stage for what we're going to talk about.
But now you said something also, lead plaintiff. Could you explain just briefly the different roles?
Sure. So in the U.S., we have a system where of class actions. So everybody is a part of a class action who's an investor in a particular security, whether you like it or not. But to lead the litigation, the court chooses an investor to be what they call the lead plaintiff. And that lead plaintiff chooses its lawyers to be the lead counsel. and they essentially run the litigation on behalf of all of the other investors. And so, what is a lead plaintiff's responsibility? You can read, I brought a couple of these, and I'm happy to send it. I couldn't carry many more in my suitcase, but there's a whole great section on being a lead plaintiff in here. But essentially, your job is to manage your lawyers. And what I mean by that is to oversee what your US lawyers are doing in running the litigation. The only real work for a lead plaintiff to do, and I shouldn't say only because it's meaningful, is when you go through the discovery process. So there's a point in the litigation where the defendants get to collect certain documents from the lead plaintiff, and they get to ask a representative from the lead plaintiff questions in a deposition format, which generally takes place in the US. It can be done remotely. We've done a number of them remotely, especially since COVID. But a lead plaintiff has a role as a fiduciary for all the other class members. As long as you're choosing quality counsel and you're picking the right cases, you don't ever have to worry about being a fiduciary, as long as your lawyers are regularly updating you on what they're doing in the litigation. And I think that last part is probably the most important part. And maybe Staffan would want to speak to this too, is making sure that you have lawyers who are doing the work, but that they're letting you know what they're doing on a regular basis.
Yes, but I also think that what you described is maybe the American approach to the relationship with the legal counsel, because in Europe, I think, at least in Sweden, you do want to participate more than just receiving the advice. For myself, even though it's time consuming, I read all the documents and I also get into facts and so on, because even though you are very skilled legal advisors, you don't know how the setup of the firm and so on, and we need to correct facts. Otherwise, when we go to court and the defendants under the position, they ask why is it stated like this? Do you understand this concept at all? And so on. So it takes a little bit more effort than just to get advice from the legal counsel. And my experience with, for example, US pension funds, they are more into, yeah, let's sue them, go for it. And then they let everything to the legal counsel. I think we are both more reluctant, but we are also a little bit more, we would like to participate more in the process. That's my experience in any way. I don't know in the audience if you have experienced it.
But I think it's also part of the fiduciary duty. I mean, in Sweden, the fiduciary duties as a management company is sort of in our blood. That's what we think all the time. The unit holders we have to represent, we have to make sure that they get, their money's worth. And being a fiduciary is not just letting someone else do things. No. We have all the delegation follow-ups with portfolio management, but this is also a delegation follow-up. Really.
I think I can clarify what I was saying, because I think you're right, is that the U.S. lawyers will do all of the legal work, meaning that you're not, as a lead plaintiff, you're not expected to be drafting briefs or analyzing U.S. law, but you are expected to be reading the documents that your lawyers provide to you, making sure that they're describing your company properly in court documents. Absolutely. But I think sometimes there's a misconception where the lead plaintiff is going to have to come to the U.S. every month and appear in court, or expected to understand the intricacies of U.S. fraud statutes. That's not the case. But to your point too, the lead plaintiff can be as involved in the litigation as they want to be. Yeah. And they can be, we have clients who want to redline every document and make edits and make suggestions on strategy, and that's absolutely welcome and fine. And then we have other investors who say, we're hiring US experts, we trust you to do this, we're going to review everything, but this is your case to litigate. So, and I think either way of doing that is acceptable, as long as you're making sure your lawyers are doing their job.
Being a Swedish lawyer, it's very interesting to go into a different legal system. You thought you had seen all of television, but it's not.
Yeah, it's not like that.
Well, Daniel, how long have you been working with this now?
Almost 3 years now.
What's your experience? I mean, you're familiar with the Swedish context and also smaller firms maybe out there. How is this perceived by Swedish asset managers?
Yeah, so just to set the setting, first of all, I'm not a lawyer, which has been both good in some sense, but also, I mean, I have to learn a lot of new things throughout these 3 years. But I came from a Swedish asset manager, Fondforum, where I was for 12 years. So this is like, when I started this, it was completely different from what I've been doing before. But the interesting part was that at Lannebo we had a lot of focus on the engagement side and the governance work in the ESG area. So it was really interesting to see the parallel of the governance work that we did there in the mostly Swedish context, where you have like nomination committees, and the engagement work that we did there really worked well. I mean, we had good access to the portfolio companies and so on. Looking in other markets where this is more present, I mean, the link between litigation and the corporate governance area is really, really strong. And I think talking to Swedish investors, there are a lot of preconceptions about this area. A lot of them have the feeling that, okay, this is just like more or less ambulance chasing. We don't like that. We don't agree with that type of work. But I think that's mostly preconceptions. You don't really understand the area that well in Sweden. And when you put down some time to learn about it, you really see the good connections with the corporate governance area. And to be frank, the way that you work with Swedish companies or Nordic companies in engagement and voting and so on, it doesn't really work in the same way in the US. You don't really get through in the same sense. So this is a really good tool to have. It's not like you do this instead of engagement or instead of voting, but when those type of things or actions don't get the result that you want, then this is like a really good backstop to fall back on.
But the outcomes are mostly, I mean, now we saw the figures that there's a lot of money on the table, but it's not the only outcome from these proceedings.
No, and that's the good thing. I mean, the money is one part. I mean, if you see that the company has done something wrong and your unit holders has lost a lot of money, of course you want to try and get the most of that loss back, of course. But I think that the good thing about these type of cases, a lot of the cases also bring a lot of different changes to the company structure in terms of operational procedures, reporting structures. It could even be like board changes or executive committee changes.
The court decides.
Yeah, the court decides, but
not the court.
No.
Yeah, not the court.
Not the court.
The plaintiffs and defendants would make those the court would approve that at the end of the day, but that would be a negotiation between the plaintiffs and the defendants.
Okay.
Yeah. But those types of corporate governance changes are only really available in the Delaware litigation, the corporate governance and M&A litigation. So your traditional securities class action, the kind of the bigger, more high-profile cases that I was talking about earlier, you can really only recover money. There are, and I know Daniel wasn't saying this.
No, but I was going to add that.
Yeah.
Even though you have those type of recoveries, the company itself do a lot of changes afterwards.
It is yes, and oftentimes what happens is that you are litigating a case against a company on certain behavior, and in the meantime they're changing everything that was going on in the company. You're not necessarily negotiating those changes, but because of you're holding them accountable. And just like Daniel was saying, you were saying, Fredrik, this is one of the only ways to hold companies accountable in the U.S. is unfortunately on a financial basis. But there are a lot of opportunities in these Delaware cases, and I mentioned the case I think earlier with AP7 and Meta, which was really a groundbreaking case where Mark Zuckerberg, and I'll just give a quick background on it because I think it's important. Mark Zuckerberg had joined the Warren Buffett promise, where he promised to give away all of his billions of dollars during his lifetime. But doing that would have meant selling so many shares of Meta that he would no longer be the controlling shareholder of Meta, which that was not good for him. So what he did was he decided to add a C class of shares and then flood the market with the C class so that would keep his A shares, meaning being the most powerful voting shares and allowing him to maintain voting control. It was actually something that a lot of founders of companies were doing in Delaware. Zillow had been done it, Under Armour, and it was really unfair to regular shareholders because it diluted the value of their shares. And so AP7 sued them and said, you can't do this without a vote of the shareholders, and it was after several years of litigation, right before we were about to go to trial, Zuckerberg withdrew the proposal, and now since then there have not been a single company in the US who has tried to add an additional share class to do what Zuckerberg did. So there really is meaningful change that can happen through litigation that institutional shareholders can initiate. It's just different forms of litigation. Yeah.
There is also direct and indirect corporate governance. I mean,
Yes.
if you invest in the US stock market, you participate in the stock market, and you have to play by the rules on the stock market. And then you could participate by being part of the cleaning work to try to keep the confidence in the stock market. Because if you let all these top management in all the listed companies just play around, because it's all about the money for them, they will take the risk if it's money on the table. And if we participate the best way in an active manner, then we tell the stock market we are going to protect the stock market. That's the only way to keep the stock market, and it's worthwhile investing in it. So if you say, well, we have an investment fund, we invest in US stocks, but we are never ever going to stand up. How much fraud there has been, we are never going to do anything. I don't think you don't buy the concept of that stock market, and then you should ask yourself, should I be on this stock market? That's to take it very far away maybe, but from the beginning you should ask yourself, and that's the fiduciary duty for all the share or unit holders, is really, you invest in the US stock markets, you need to file the claim form so you get the money that's from the already settled actions. That's a fiduciary duty. If you don't, you leave money on the table for others to receive money that belongs to your unit holders. That's the first step. And when you learn about that process, it's not that far away to engage also on the active side. And then you can choose on what level and how conservative you should be and so on. But being on the US stock market, you should also participate in these kind of, in a moderate way.
Because you're the beneficiary of everybody else who's being a lead plaintiff, right? Because there are all these other institutional investors who are serving as lead plaintiffs in cases. You collect that free money.
If no one raises their hand,
Right, then there's nobody to get the money back. That's right. Yeah.
But since the knowledge about this area is quite limited in Sweden, I think there are a lot of...
not after this.
No, exactly, but a lot of asset managers and also bigger pension funds that don't really have a process for collecting those type of settlement money. And if they don't have that, then...
So, but how does it work? So the court decides on an amount, and so it's not necessarily depending on how many shares that are represented in the case.
It's all shares.
It's always all shares,
Yeah.
but the only ones that get the money actually are the ones that are participating either as a lead plaintiff or a passive plaintiff.
Well, the lead plaintiff and then the passive class members have to file paperwork in the settlement.
You are in the group.
But you're
From
in the
the
You
group.
are in the group, yeah, okay.
That's opt out.
Yeah,
You
okay,
need to
so
opt
that's
out
no,
to
alright.
take your own case to the court or whatever.
Yeah.
Fredrik, I would just add
You
to
can
that.
explain
I
that.
think it's important that what we see is a lot of our clients now are actually utilizing the fact that they're a lead plaintiff in their materials that they're putting out annually to their clients and letting them know that, you know, I think it used to be when I started coming here 25 years ago, well, first of all, nobody wanted to be a lead plaintiff in a case, but as people decided they wanted to be active, they said, okay, we'll do this, but we don't want anybody to know about it. And that attitude has changed a lot, and we see a lot of our clients putting in their annual reports, pension funds, asset managers saying, we're the lead plaintiff in this, we accomplished this recovery. And I think it's important for unit holders, for pensioners to know, and I think that there can be real public pressure to be involved. I mean, I think it's no secret to anybody here what happened with Electa with the 3 banks in the US.
Yeah.
All 3 of those banks have securities class actions pending against them. The first 2 that went to court were SVB and Signature Bank, and there were Nordic investors who became the lead plaintiff in the first 2 cases, and First Republic was the last one. And I think and I'm not speaking for Electa, but I think that there was certainly pressure for Electa to be involved in one of the, like to see other Nordic investors taking the lead when they had such a high profile loss there. So I think there can be actual benefits in promoting the fact that you're being involved in these kinds of cases.
Yeah. I think that the type of governance work that you do via litigation is easier to communicate around that than the governance work that you do with Swedish companies. Like for example, what you talk about in the nomination committees or with the portfolio companies and the dialogue that you have with them. Often that is something that you don't want to make public because it's between you and the company. But this is per definition public because it becomes public. So this is a way to show what type of governance work and engagement work that you do for your unit holders. And, you know.
But Staffan, you sound that you are convicted, but what other means would there be if you see something, a problem in a US company? I mean,
No, I share the view from Darren that it's not so much more available.
yeah.
Since the SEC, their resources and so on, they have a lot of resources have been taken away, so they are not so active. I think they have publicly stated that they want the private initiatives against the
To police the markets.
the markets
Yeah.
because they have no resources and so on. And you know, as far as I know, there is no disciplinary committee on the New York Stock Exchange like in Sweden. You can have different opinions on this, but in Sweden, the system with the disciplinary committee is something that we embrace and we think it works, and they can have file sanctions and so on. But I mean, top management in the US that gets a company or whatever gets a sanction of 5 million or something, that's nothing for them. So I mean, US is all about the money. But for us, it's not about the money, because being a large management company in Sweden, the recovery in cash, it's this small on the asset under management. But to be able to participate, as I said before, in the keeping the reputation of the stock market, that's important for us.
But how you have been lead plaintiff?
Yes.
And,
We have only one finalized process,
okay, but how,
large one. And then we are now engaged in another one, yes.
what's the upside to be a lead plaintiff?
It's very interesting for the lawyer.
Okay. Don't tell your bosses. Okay.
No, but I think it gets a very good insight into how the stock market works and how the companies that you are investing in, how they are working and in what environment they are working, and how you can bad behavior to get rid of bad behavior. And this is the concept that it's available.
Can I add something to that? I assuming that Staffan agrees, but I think there's also what I was saying too, the positive publicity that you can put around being involved in these cases by saying to your unit holders, yeah, if we have an instance where we're really defrauded, we're going to do something about it. And the benefit of the lead plaintiff process in the US is, if Staffan decides that he wants to be the lead plaintiff in a case against whatever bank, Bank of America, and he's lost, Handelsbanken funds have lost $20 million, and he says, I want to be the lead plaintiff. They make their motion for lead plaintiff, which everybody does on the same day. There's a court-ordered 60-day period that you have to decide. Everyone makes their motion at the same time, and there's another investor, let's say the Oregon State Pension Fund, and they've lost $40 million. Well, the Oregon State Pension Fund is going to be appointed as the lead plaintiff. They have a much larger loss there, but there's no harm to Staffan for making that motion. Handelsbanken is still a member of the class. They still follow along in the litigation and participate in any recovery. But he gets the benefit of saying, well, I lost $20 million. I want to make sure that there's a lead plaintiff there who's going to get the best possible recovery, not only for me or the class, so we're going to step forward and do that. But if there's somebody with a larger loss who's qualified, they're going to wind up being the lead plaintiff, and he's still a member of the class.
Or we form a group.
Or you form a group, yeah.
But is there any risks? Are there any financial risks? Do you have to put your own money on the table?
No.
No. Okay. Maybe that's why it's so easy to take on the fiduciary duty.
In the US concept, yes. But if you go around the globe, it will take a long while before we go into kind of securities litigation in any other country in the world, because there are so much unknown risks. And you can also end up with huge costs for the management company. So take UK for example, you need to have a entry into funding agreement to fund the securities litigation process. And if the money is gone, if you use all the money in that fund, then you have to start to pay. And also, why should I use 100 of my working hours in reading and commenting on a funding agreement? I mean, it's so the US system is very well established. It works. It's totally different what we have in Europe and so on. But I wouldn't rely on any other system around the globe. And I mean, we have been approached when it came to, I think there is a kind of grupptalan against Ericsson here in Sweden. Well, I wouldn't trust the process, I wouldn't trust the court system, I wouldn't trust the concept of it.
But you also mentioned that...
Sorry, there might be someone here who is participating in that group.
No, not that one, but I do think it's a bit unfair to just draw everyone on the same line, because I mean there are even though the European judicial system looks pretty similar, there's still more mature jurisdictions, and there are also like sometimes more important questions comes up. And I think like what you said before about why we're really doing this, it doesn't always have to do about money. It has to do with sending a strong signal to the market. We don't accept this. You need to do better.
Absolutely, but depending on the risk you take.
Of course.
And I mean, we have opted in one process in Europe but we hope and guess that it's money on the table. But we'll see.
There can be, I think, like I think what you have to do is what we advise our clients is you have to look at it on a jurisdiction by jurisdiction basis, decide what your risk appetite is for each jurisdiction, and set a financial threshold for each jurisdiction. Because something that you might pursue in the Netherlands where you lost €1 million, you would never pursue that same case in the UK. So we have a lot, like for the Netherlands, for example, is almost identical to the US now. There's no work to be done by, you're just joining to be a member of the group. There's no financial downside risk, etc. And so we tell clients, even if they lost €500,000, sure, join the action. It makes sense. You know, there's no downside. In the UK, not the case. To Staffan's point, you can have costs that get out of control. The litigation can take years. Certain claims in the UK can require PMs to have to go and testify. So, you know, and again, I'll point you to this primer, which breaks down like 24 different jurisdictions around the globe and how they work. It's really important to know what jurisdiction you're in. You know, Japan is a jurisdiction where there's very little work to do. Australia is a Rule 23 type system like the US. But a place like Germany, you can have a lot of work in front of you. Or arbitration in Brazil is a complete mess for most investors. So you really have to just know what you're getting yourself into, because there can be a lot of risk. But I think to Caroline's point, there are jurisdictions where it does make sense to say, okay, look, we're going to try and get our money back here.
Yeah, I simplified it too much.
But when you're all talking about the responsibility, or sort of, the putting back some of the responsibility to companies when they have done mistakes or frauds or whatever, and but how is that? Does it really work? I mean, now you discussed that they do some changes, but the money sometimes is from the company, sometimes from board members or the CEO or whatever. How are they covering up for this money, so to say?
You mean how are they paying for
how are they
the
paying?
settlements?
You mentioned insurances before.
So the majority of the settlement dollars that you saw on that chart
Yeah.
are coming from insurance. They're coming from D&O insurance policies and that. So there's a good and a bad to that, right?
Yeah.
The good is that it's not coming from the company's coffers, and therefore you're not theoretically devaluing the company. The bad part of that is insurance premiums can go up for companies. They can have to pay more money. And then it leads to the question that you're saying, which is, well, are we really holding the company accountable if it's just an insurance company paying for it? I think it's and that leads to a common phrase that we hear about plaintiffs' law firms and this type of litigation, which is that you're robbing Peter to pay Paul, right? You're just taking the company's money and you're giving it back to existing shareholders or people who've sold their shares, but you're not really changing anything. I think that's a very simple answer to a very complicated question. And the reality of it is that companies oftentimes change management as a result of this kind of litigation. They're getting rid of executives who've committed fraud. They're getting rid of people who might be just below the C-level who have committed these kinds of frauds. And you're hopefully finding that these companies aren't committing the same kind of frauds over and over again. And that the compensation piece of it, insurance is just a reality of any company. I'm sure companies here in Sweden have insurance for different things that happen to them. And more, we are seeing that individuals, while maybe not the amounts of money that would be, life-changing for them, they are contributing to the kinds of settlements that you're seeing where money is actually coming out of defendants' pockets. Now, in the Delaware litigation that we talked about, that in those instances, you oftentimes are actually taking money back from individual defendants. So a lot of that litigation has to do with executive compensation or money that was gotten through mergers and acquisitions where officers and executives were getting more than they should have through a merger and acquisition. They were being treated better than individual regular shareholders were. And so there are opportunities to actually hold individuals accountable, but yes, a lot of this money is coming from insurance policies at the end of the day.
Yeah, but the insurance, it's often like the landing for the company financially, but the lesson is still learned. I mean, as you say, that in Delaware court, you can create a lot of changes in the company, but the changes are also made in other type of cases, like the securities cases as well, because they don't want the same thing to happen again. So I think it's easy to forget that and only look at the money, but you
and the insurances could be consumed also.
Oh, absolutely. We deal with a lot of instances where the insurance policy gets used up during the litigation by paying their lawyers. And I think what's also important to note too is on this idea of suing companies that you're an investor in, right? At the end of the day, these cases are going to go forward whether you as Handelsbanken or SEB or whoever it is gets involved, right? The case is going to go forward. To me, and I think you could certainly argue the counterpoint, but if you are an existing shareholder in a company, especially if you're a large shareholder in a company, and this litigation is going to go forward, wouldn't you want to be the lead plaintiff and make sure that there's a settlement that's not only fair for the shareholders, but also leaves the company hopefully in better shape than it is when the lawsuit was being brought? I think that there's an ability to, you have to remember too, any settlement that is negotiated between the plaintiffs and the defendants in any of these cases ultimately has to be approved by the court. So the judge has to say that the settlement is what we call fair and reasonable, meaning that it's fair to the company, it's fair to the plaintiffs, and so you want to be able to craft a settlement that is going to be in the best interests of not only the shareholders but the company. There are many instances where we have companies that are having trouble financially, and what's the best way for them to resolve a case may not be through cash but through issuing shares, and they would issue shares as part of a settlement. If you have a sophisticated investor and you have a very good law firm standing next to them, they are going to find a way to craft a settlement that's going to be fair to everybody and hopefully leave that company in better shape. If you have a smaller retail investor or a small institution that has no continuing interest in the company, they're going to go what we call scorched earth. They're going to try and squeeze every dollar from that company, and they don't care what happens to the company at the end of the day. So I think there's actually a really good argument as to why an existing shareholder should be a lead plaintiff in a case, that you want to control that litigation.
But
what's the alternative? I mean, let them continue with bad behavior.
But we don't have this system in Sweden, and we do have problems in Sweden once in a while, but it's not. How would you compare this system with the Swedish system? Because one difference is that the legal advisors, they get paid from the settlement, so they take their part when it's on what it was called?
Contingency.
Fee. But in Sweden, that's not really allowed with if you're a law firm in Sweden under Advokatsamfundet, then it's not allowed, as I understand it. So how would it work in the Swedish system, or how do you think that we will see more of this?
I don't think that we will. It will take a while before contingency fees will be accepted. So before that, we need to have a system with funding structures and so on.
Are they present? I mean, do you have?
In Sweden, I don't know.
Yeah.
The Ericsson case is being funded by a law firm called Quinn Emanuel, and they've hired, I think, Vinga as their local law firm.
Okay.
And so what they'll do is they will pay Vinga on an hourly basis, and then they will have a contingency arrangement with the investors that they sign up for the case, and that's generally how it works.
Okay. So
globally.
they take the risk. Vinga gets money anyway, but they take the risk.
So in all of these jurisdictions, not all, but
Yeah.
in the UK, in Germany, in Japan, the lawyers cannot work on a contingent basis. So the litigation funder comes in, they pay those hourly rates. Sometimes it's at a negotiated lower rate, and then they can get an uplift if the case is successful. But then you, as an investor, are engaging with the litigation funder directly. The danger in that sometimes, as Staffan was alluding to earlier, is you know, these cases outside the U.S. can take 3, 5, 7, 8 years to litigate. You have to make sure that you're getting involved with the litigation funder that is going to be there for that many years and is going to be paying the bills. And the litigation funding space is, you know, we would refer to it in the U.S. as kind of the Wild West. There are litigation funders popping up everywhere.
Okay.
And so a lot of hedge funds, yeah. So that's the danger in that. Yeah. It's a great business too, because this, I think, is important. These litigation funders make money whether the case is successful or not. And I think that's one of the reasons why you really have to examine the merits of these non-US cases, because they work on a hedge fund type system. So once they put the money to work, they start collecting fees. And so whether the case works out at the end of the day, they don't care. And so they will engage in what I would argue is a lot of frivolous litigation. And so you really have to examine those cases closely. Some of them are very obvious. Volkswagen, the Philips case in the Netherlands, there's obviously been wrongdoing, but a lot of them are much closer calls.
But this is a really important part for us as well as a US law firm. Like talking to a European client, for example, and they are looking to get involved in a European case. Like for us to help the client to look at the different alternatives and to look at the funders and to look at the different cases, I mean, that's one of the jobs that we do for the clients.
For sure.
But the contingency fee is a nice feature, since the law firm will work really hard for a case. Otherwise, they lose all the money.
Yeah, that's the argument for performance fees in funds as well. But Staffan, to be a little bit mean to you, you're talking a lot about now fiduciary duty and so on, but this is cheap for you since they are doing all the work, and if they're successful, they get paid. But we have other cases in the financial markets where the fund industry are criticized. I mean, one recent issue is about Iljan Batlan's company with a corporate bond, where he's renegotiating all the agreements in the fund structure. We have not prepared this, so that's why it looks a little bit. No, but then the funds have, if they want to engage and put in some effort to defend their rights, they have to put in a lot of their work, their own work, or pay a legal advisor from outside. And the money cannot be taken from the settlement. There is no sort of, it's not the case, and it cannot, in Sweden, it cannot be taken from the funds. Do you think that affects the sort of the ambition on the fiduciary duty?
Well, I think we still will act when it's a clear-cut case, or if it's quite certain that we will win.
Yeah.
But in very uncertain cases, we will not. Yeah. But then it's also about, I mean, you could argue that we should act in each and every case because we receive the förvaltningsavgift.
Yeah.
But I mean, that's not.
Too many cases.
Yeah, and it's. And I also think that we should be able to use the unit holders' money actually from the fund.
Yeah.
That would be And then we are audited, and we are under supervision and so on.
So
Why
it could
not?
just be done in a prudent way anyway.
Yes.
If we,
We act prudent nowadays now
Yeah,
also.
okay.
I think
Yeah.
that would be a good thing.
yeah.
I think one important thing to stress is that you brought up the list of all the cases, like around 200 cases per year. A lot of the suggestions or recommendations that we bring to our clients, and I assume that you do the same. It's to be a negative recommendation, not to act on the case, just to be passive, and if the case goes forward, then you still get your part of the share that you are entitled to. But I think that's really important to stress. I mean, the really large percentage of cases are negative recommendations. So just because you have a law firm that you have a relationship with, you won't receive.
Don't trust a law firm that every time you lose a lot of money wants you to be a legal
No,
aid.
exactly. I think that's
Because just because you lost a lot of money doesn't mean there's a fraud.
no.
Right.
But not this is not a commercial, but I think it's really important to pick the right law firm. We have no relationship with those firms. But I think that's really, really important. And look at the firm's track record. And also how you are working, how you are supposed to work with the law firm, and how they are understanding you as an investor. Because there are law firms in the US who almost only work with other US investors, and they don't really understand how we Europeans work and how we think. And
I think the most important factor to ask a law firm, honestly, is not about their successes. A lot of law firms can list, successes that they've had, and sometimes they're not even, you should be careful too, because sometimes they're not even successes that they have had. They're successes that the lawyers had when they were working at other law firms, but they list them. The most important thing you can ask a law firm in this particular space is, what is your dismissal rate? And that, to me, is the most important barometer of what a law firm does in this space, because it means if they have a very low dismissal rate, and the firm that Staffan uses in my firm have the 2 lowest dismissal rates in the field, and Daniel's is pretty low too, and we work a lot with both. My firm works a lot with both of their firms. We have very good relationships, but the dismissal rate is the most important thing. How many cases are they bringing, and how many of them are being dismissed versus how many are actually getting to a resolution? And any law firm should be able to show you that chart that they have for the last 5 years. And to me, that's important, because that means that they're only bringing the best cases to their clients. And nobody is going to have a 100% success rate, because you run into bad judges, you run into complications, and when you get into discovery, maybe the case isn't as good as you thought when you were first looking at it. But that dismissal rate is the most important thing. And Staffan is not representing a firm, but the firm that he works with primarily, and Daniel's firm and my firm, and there are maybe 2 other firms out there that are, maybe 3, that are representing the largest investors in the most important cases. That's just the reality of it. It's a very small group of law firms that have the wherewithal to litigate these cases, because we are representing large institutional investors against the most well-financed companies and law firms in the world. And so if you are not able to litigate these cases with very skilled defense lawyers, and the reality of it is that when I first started doing this in the early 2000s, if you got past what's called a motion to dismiss, which is a very early stage in the litigation, the defendants generally wanted to settle the case. They didn't want the exposure or the long litigation. That's changed dramatically. Most of these cases that are the really good cases are going very deep into litigation. Most of the time to what we say the steps of the courthouse, meaning right before trial, before they're ready to resolve. If your law firm is not willing to spend what is really millions of dollars in attorney time and actual hard dollar costs through discovery and experts and litigating a case, they're going to want to settle cheap, settle early, and that's not going to be in the best interests of the class, of you, and you're going to not get a good resolution in the case. And I will just tell one really quick anecdote, which I think is important. Many years ago, we represented AP4 and PGGM, the Dutch National Pension Fund, in a very big case against Bank of America. It had to do with their merger with Merrill Lynch during the financial crisis. And we teamed up with another law firm, and who represented 2 U.S. state pension funds, the state of Ohio and the Texas Teachers Pension Fund. We had been litigating the case for 5 years, and the defendants came to us and offered us $1 billion to settle the case. And $1 billion is a lot of money, And the 2 U.S. pension funds said, "We'll take it." And they immediately wanted to settle. We'd been litigating for 5 years. We were headed towards trial, and they didn't want any more. But the 2 European funds said, "No, that's not enough. We've been doing this for 5 years. There's more." And the most important thing that they wanted some corporate governance changes. Now, corporate governance changes you can't really get through federal securities litigation any longer, but at the time you could. So we litigated for another 6 months, only 6 more months. And the case wound up settling for $2.35 billion, more than double. And we got a whole list of corporate governance changes at the board level. Unfortunately, there were sunrise provisions on that, or sunset provisions. So after 5 years, they all went away. But the financial recovery doubled. And that was because there were 2 very strong lead plaintiffs who said, "We're not ready to settle. We've been doing this long enough." So who's involved in the case and who the law firms are really do make a difference in the outcome at the end of the day.
Yeah, and that's why courts want
Yes, that's
professional
yes,
investors as lead
absolutely,
plaintiffs.
100%, yeah.
Now when we look at Europe and to have some sort of trying to forecast if this is going to pick up in the European context, I was thinking there are 2, we have the Shareholders' Rights Directive coming up, a review on that. I don't know if that's any connection with this phenomenon. And we also have the Corporate Sustainability Due Diligence Directive, which is sort of enforcing more control on companies to secure their supply chain. And do you think that this will affect the possibilities of seeing more litigations in Europe?
We are talking about directives, first of all, so it will be implemented in several ways in Europe, and this is kind of core corporate law and how the stock market functions and so on. So I don't think that it will change so much.
I think the investor rights and the enforcement mechanisms that you have in the US, that will probably increase here in Europe as well, going forward. But it's a slow change. Then, I mean, do we want the European region or Nordic region to become like the US in terms of litigations, like 200 litigations a year? I don't think so. But I mean, I think we need the changes that need to be made is like to change from the opt-in procedure as you have in Europe, a lot of jurisdictions in Europe, more to an opt-out procedure. I think that would be a really critical way to make the possibilities to do a lot more cases here, or at least for the investors to be more involved.
But we don't have the same problem here. I mean,
I was just going to say, I don't think there are
why fix something that is not broken?
Yeah, I don't think you want a U.S. style system here. I think the U.S. system is broken in many ways. It still works very well in some ways, but it's also broken in many ways. And I think that the only thing that dramatically changes the amount of litigation would be an acceptance of the contingency fee system. But even if you look at Australia has essentially allowed contingency fees now. They've gotten rid of the funder model, and there has not been a major uptick in litigation. And I think the reason for that is there just aren't enough opportunities. There are not enough good cases, and the lawyers there aren't like American lawyers, so they're not just chasing after.
It's not greed on the same level as in the US.
No, that's listen. I'm not going to sit up here and tell you that American lawyers. There are plenty of ambulance chasers, and even in this field, there are plenty of people who are just filing hundreds of those lawsuits that you saw to make a quick fee and
I meant greed within the company.
Oh well, that too. Yeah, that too.
Sorry.
Yeah, but I mean, there's I just and there aren't as many listed companies at the end of the day too, right? I mean, there aren't going to be enough opportunities for it. But I think that currently the funding system works well in keeping the number of cases down here in Europe.
Do we have any questions from the audience? It's all clear. Yeah? Oh, yeah.
I think it was interesting to see the numbers you showed about the cases that were filed and then the settlement numbers. And you said that you thought that there were maybe 20 cases per year that were not frivolous. That's kind of 10% of the total or less.
I think I said 20 or 30.
Yeah,
Maybe
okay,
lean
yeah.
towards that. But yes.
Still, it's a large number of frivolous cases. Are there mechanisms to reduce this number? Because it's really costly to the issuers.
I'm sorry, I didn't hear the last.
Costly to the issuers.
No,
even though
I-
it's
yeah.
frivolous, I mean, it takes a lot of time and effort.
So maybe I shouldn't have used the word frivolous, because frivolous, if you say a case is frivolous, that means that the law firm can be sanctioned for bringing it, meaning
Okay,
that there
yeah.
was no basis at all for bringing it. There's definitely a good amount of frivolous litigation, but maybe in the majority of those cases, there's just not a strong enough basis
Yeah.
to be able to bring it. The answer to your question is, unfortunately, no. There is not a mechanism to reduce the number of cases. We have a very open court system that allows anybody to bring a case when they're a shareholder. The problem that we have as investor right advocates and as plaintiffs' lawyers is that the solutions that the quote other side have come up with would be to completely close the courtroom door. Not to say let's have a better system for what would allow somebody to bring a lawsuit, but it's let's end these completely. So we're constantly fighting off these efforts to completely close the courtroom door, and there's not really much of an opportunity to dialogue on what could be, a mechanism to reduce the number of cases. The other problem is that at the end of the day, you want a court, a judge, to be able to decide what is a good case and what is a bad case. I think as an investor, certainly as lawyers, we can look at some cases and say, that is just ridiculous. Why would anybody bring that case? Unfortunately, that's a very long way of saying there's not any way to really significantly reduce the number of cases, which is I think why you see in the past 30 years, the number has been pretty consistent. I wish the answer was yes, but yeah.
Anyone else? Okay, it's 1 o'clock.
Great
Thank you
timing.
very much for thank you for coming, and thank you very much for